Good morning, everybody. I'm Devarsh, and today we have with us Nandish and Subash. Good morning, Subash.
Good morning, Devarsh bhai, and good morning, everyone.
Right. And how are you, Nandish?
Fine, Devarsh bhai. Good morning. Hi, friends. Welcome to this webinar.
All right. So this is our fortnightly market outlook webinar. My colleagues, Subash and Nandish, will speak in that order. Subash will tell us about the markets from the technical charts perspective. Nandish will share the derivative data, and post that, I will come and I will try to cover some important economic events, what is happening in the markets, and the outlook. Try to summarize the our findings of both my colleagues. So first, let us hear from Subash about the markets from the technical perspective. Over to you, Subash.
Yeah, thank you. Is my screen visible, the PowerPoint?
Once again, I'm trying to make you presenter. Please hold for a minute. Omkar, can you make Subash presenter, please?
Yes, yeah, wait. Oh, Subhas, you can present now.
Yeah. Is my screen visible? The
Yes,
Yes.
Subash, it is visible.
Okay.
Yeah, go ahead.
Yeah, so good morning, everyone. So as Devash bhai said, I will be giving the technical outlook. So the markets surged higher this week to close at a 6-month high. This week's gains have come after 2 weeks of sideways price action, and Nifty has finally crossed the previous swing high of 18,778 to gain 1.41% week on week. So reflecting the positive sentiments, market breadth was positive in 4 out of the 5 sessions of the week. Technical indicators like 14-day RSI too have bounced back and crossed its 9-day EMA, which indicates that momentum is picking up. So while the short-term and intermediate trend is firmly up, we must remember that the short-term uptrend is matured, and the short-term trend reversal level is now at 18,555. So as long as these levels are not broken, we expect the uptrend to continue, and we recommend to enjoy the rally till it lasts. So as you can see on the Nifty daily chart, the 14-day RSI has bounced back and crossed its 9-day EMA, and Nifty continues to make higher tops, higher bottoms. It has crossed the last week's high. And if we look at the weekly chart also, intermediate trend remains firmly up, and the 14-week RSI is only at around 66, which indicates it is not overbought and there is still a lot of upside potential left in this rally. Coming to the sectors, barring the Bank Nifty, all the sectoral indices ended higher this week. Top gainers and outperformers were the Realty, FMCG, Metal and Pharma indices. Indices that gained the least were the PSU Bank, Fin Nifty, IT and Auto indices. If we look at the daily charts, we can see that most of the sectoral indices remain in short-term uptrend. Bank Nifty, Fin Nifty and energy indices have, however, recently bounced back from supports, thereby offering better risk-reward trades for the near term. Both the Bank Nifty and Fin Nifty have bounced back from the 50-day SMA, indicating that uptrend looks set to continue. If you look at the Bank Nifty, there is some immediate resistance around 44,200. So once that is taken out, we expect the momentum to pick up in this index. So as you can see, the Bank Nifty daily chart, it has bounced back from close to its 50-day SMA, and there is some resistance around 44,200. So once that is taken out, we expect the upside momentum to gain. Similarly, the Fin Nifty has also bounced back from the 50-day SMA, and the 14-day RSI too has bounced back and crossed its 9-day EMA. So it has also closed above the 20-day SMA. So that is a positive signal for the Fin Nifty. Energy index was consolidating in a range that has also broken out of the range this week, and it is also above the important moving averages. So that is a positive signal. Coming to the outlook, Nifty remains in a short-term and intermediate uptrend. With the 14-day RSI bouncing back and not overbought, we believe the uptrend looks set to continue. Our immediate upside targets for Nifty are at 19,000, and once that is crossed, then Nifty could be heading towards 19,200 to 19,300 in the coming weeks. Short-term trend reversal levels are at 18,555. So we expect sectoral rotation to happen, as underperforming sectors this week could outperform in the coming weeks. So Bank Nifty, Fin Nifty, and IT, which were underperformers, could start outperforming in the coming weeks. Broad market indices like mid cap and small cap continue to outperform. They gained 2.9% and 2.85% respectively. So coming to our conclusion, we expect the market to continue its uptrend. We remain open to short-term corrections as long as our short-term reversal levels of 18,555 are not broken. We expect sectoral rotation, as recent outperformers could take a breather, while underperformers like Bank Nifty and Fin Nifty could pick up some momentum. Mid cap and small caps are likely to continue their outperformance, and we recommend staying invested in these two segments. We expect the Nifty to head towards 19,000 levels, and once that is crossed, our next targets are at 19,200 to 19,300 levels in the coming weeks. Now that's all from my side. Now over to Nandish for the derivative view.
Thank you, Subash. Is my screen visible?
Yes, it is.
Yes, I can see your screen.
Okay. So friends, I'm going to discuss how the market is looking from the derivative side. So let's straight away jump to the presentation. During the week, we have seen long build-up, where we have seen 8% rise in the Nifty open interest, with Nifty rising by 1.41%. So we have seen long build-up in the Nifty future. On the other end, we have seen muted activity in the Bank Nifty futures, where we have seen only 2% rise in the open interest during the entire week, with Bank Nifty falling by 0.12%. So there is no major action in the Bank Nifty futures. Coming to option side, Nifty open interest put call ratio rose sharply to 1.29 levels last week from 0.84 levels. This rise in put call ratio is largely on the back of put writing at 18,700 to 18,800 levels, indicating that on the immediately 18,700 to 18,800 level to act as an immediate support, followed by 18,500 levels. On the higher side, Nifty is likely to find an immediate resistance around 19,000 levels, where we have seen call writing. So as you can see from this option distribution chart, we have seen put writing at 18,700 and 18,800 levels, followed by 18,500 levels, while on the higher side, we have seen call writing at 19,000 levels. So as of now, 18,700 to 18,800 level to act as an immediate support, followed by 18,500 levels. And on the higher side, 19,000 level is at the level where we think that Nifty may find resistance. Coming to important data, FIs. During this week, we have seen long build-up by the FIs in the index future segment, where the net worth was rupees 2778 crore, with their open interest going up by 18,000 contracts. However, if you were to see the breakup of this index future segment, FIs have created fresh long in the Nifty futures during the week, while they have created short position in the Bank Nifty futures. So on the one end, they are creating longs in the Nifty, while on the other end, they are creating bank shorts in the Bank Nifty futures. FI's net long to short ratio, which we have been tracking since long, now it has moved up to 1.23 levels from 0.86 levels. So which in turn indicates that FIs are now net long in the index future segment. So although it has risen from 0.10 at which we began the April series to 1.23 levels now, it is still below the 2.5 to 3 levels at which was there in the November December 2022 in the month where Nifty made an all-time high of 18,887. So although it has risen, this ratio has risen from 0.10 to 1.23 level, it is still much below the levels which we saw in the month of November December 2022. Moreover, in cash segment also, FIs continued to buy in the June series also. Till now, they have bought worth rupees 14,500 crore in the cash market till now in the June series. This also augurs well for the market going forward. So as you can see from this chart, FI's long to short ratio was 0.86 during last week. Now it has moved up to 1.23 levels. But the important thing is that although it has moved up to 0.86 to 1.23 levels, you can see from here when Nifty made an all-time high of 18,887 in the month of December 2022, it was around 2.53, and now it is 1.23. So still there is more room for a long build-up by the FIs, and therefore we believe that market can continue to do well. So coming to outlook, as I discussed earlier, long build-up in the Nifty futures during the week, put writing at 18,700, 18,800 levels, followed by 18,500 levels. Long build-up by the FIs in the Nifty future segment, and their long to short ratio still below the level of 2.5 to 3. We believe that downside is limited in the market, and one should remain optimistic for the market for the coming days. Therefore, our advice is to remain bullish and accumulate long with the trailing stop loss of 18,500 levels. As Subash mentioned, on the higher side, 19,000 level to act as an immediate resistance. But once we able to cross that, on the higher side, we may go to a 19,200 to 300 levels. Coming to Bank Nifty, muted activity seen in the Bank Nifty futures during the week. So there was no short build-up, though Bank Nifty underperformed the Nifty. That is good. And also the put writing at 40,500 to 44,000 levels. Both these indicators indicates that in Bank Nifty also downside is limited, and one should accumulate longs with stop loss of 40,400 levels. On the higher side, yes, so 44,000 to 44,200 level to act as an immediate resistance where calls have been written. But once Bank Nifty manages to close above 44,200 level, we might see sharp short covering. As I discussed earlier, FIs are also net short in the Bank Nifty. So above 44,200, we are expecting a sharp short covering the Bank Nifty, which might push Bank Nifty to even 45,000 levels in the coming weeks. Now coming to sectors, during this week there are many sectors in which we have seen long build-up. Among the sector, banking finance stocks, we have seen long build-up. Capital goods is the another sector where we have seen long build-up, and also FMCG and pharma. So these are the four sectors which you should focus on to accumulate longs in the stocks from this sector. So this is all I want to share from the derivative side. Over to you, Devarsh bhai.
Okay, thank you, Nandish. Is my screen visible now?
Yes, Devarsh bhai, it is visible.
Okay. So let me now just take you through the key developments which has happened over the last fortnight. So the most important event was that the US FOMC has kept the rate unchanged last week, and after a series of aggressive rate hikes, this was the first time where they have kept the interest rates unchanged. Now inflation is coming down and economy is also showing some signs of softening. So they are now data dependent. This is an opportunity for the Fed to evaluate the inflation and economic conditions before they make any further move. So core CPI is the main data which they check, and here we can see that the inflation is slightly coming down. It was during the COVID time, it shot up, and now gradually after touching a peak around May to June of 2022, gradually this data is showing some signs of coming down. So as you can see from this chart, usually if you want to predict the future interest rates, you have to look at the core CPI. And here the blue line suggests that the interest rates are at the peak. Core CPI inflation YOY has started coming down, and this suggests that eventually after maybe second half of the year, June, July, this interest rates will also peak out, and hopefully in the 2024 we will see the interest rates coming down. So mostly they will either hike one more time or keep it steady depending upon the data which we get from here till July, and then eventually in 2024 we may see interest rates coming down. So the important message is that the US Fed has stopped raising the rates, and as soon as we have a Fed which is not very hawkish, stock market shifted to another gear. There is a good rally going on in the US market. In fact, S&P 500 index notched its longest stretch of daily gains since November of 2021, and this was the best weekly performance since the end of the March, where the market bottomed out. As we know, market bottomed out in the March month, and then gradually we have seen a good rally. So we have seen one good round of rally. Now let's see what kind of movement has happened in the global markets over the last fortnight and last 1 month. So as you can see, the Nasdaq has gone up about 18%. The S&P 500 is up about 8%. The Japanese market has taken off. 13% gains over the last 1 month, and about 7% gains are there over the last fortnight. This is the top performing market. After 33 years, they are reclaiming their previous highs, and money is moving into Japanese market. Marquee investors like Warren Buffett and others have also invested, and that is also bringing in a lot of retail money there. The other markets like Germany and Hang Seng are also performing. Chinese markets are struggling, up only 1% over the last fortnight and almost down over the last 1 month. So this is the global backdrop. In this backdrop, how Indian markets have done? So our markets have also done well. As we have been pointing out, Sensex and Nifty have gone up about 2 to 3% over the last 1 month. The mid cap and small cap, where there is action, and that's where we have been recommending stocks. We have been asking our customers, traders to look at them. Mid cap is up about 7% and small cap is up about 8% over the last 1 month. Same is the case for the last fortnight, 3.47% in mid cap over the last fortnight and 4.06% in small cap over the last fortnight. So markets are doing quite well. We have been asking our all of you to look at the markets positively, and those positive view is playing out in the market. The conviction has played out. Capital goods, real estate, these are the sectors which has been doing quite well. While IT is the struggler, it has gone down by 1.5% over the last fortnight. Recently, banking and IT is not performing over the last 1 month, while real estate, healthcare, capital goods, consumer, these are the stocks which have done quite well. Well, the FI flows, which was quite negative over the last from June 2021 to June 2022, in last 1 year they have turned net buyers. Gradually, every day they are putting in new money, and for that now, if you look at the 12-month rolling period data, FIs have turned buyers also net to net for the last 12 months. So foreign money is coming in. We have seen many times the SIP money from the domestic market is continuing. We have seen that data many times. We have mentioned it, so I'm not repeating it. So right now, both institution side, domestic as well as the foreigners are net buyers. What is the important economic event calendar looking like? So China is going to be closed on 22 and 23rd of June. So Thursday, Friday, China is closed. Monday, US market is closed because of the Juneteenth holiday. So it is going to be holiday, shortened week. A lot of market participants from China and US will not be there. On 28th of the June, at the end of this month, we will have also a Bakrid holiday. So that means over the next fortnight, we can expect some little lower participation from all these markets. Other than that, no important large economic policy event is scheduled. Only Bank of England policy meeting is there on the 22nd of June. Now I wanted to show you some data. Is my screen visible, Nandish? Subash?
Yes, yes, Devarsh.
Okay, thank you. So,
Yes, visible.
right, so this is the most important chart which I wanted to show. This is the dollar index. It is the all big currencies against dollar, how it is trading. So around 22 uh, late August, September, dollar index peaked out around 115, and since then it is making lower lows and lower highs. It peaked around 106 in June, August of 23, March of 23, I'm sorry. And in June, May, June, it is again peaked around 104. Now it is trading around 102 levels. So if dollar index were to break 101 kind of levels, keep this level in mind over the next 1 month. If dollar index breaks 101 level, we will have huge amount of flows coming into Asian markets, coming into emerging markets. So this lower top and lower bottom pattern is very positive for Indian markets. As long as dollar remains weak, we will continue to get a lot of flows. Another important data is this: the volatility index is at a very low level. 13.5 is the VIX level for US markets. This may go down to something like 11.5 or 12 level, but eventually, friends, VIX will pick up. What this means is that the smooth rally which we saw over the last 1 month to 2 months, from April, May, and almost mid-June, we have seen a volatility going down, markets performing. Volatility has now reached a level where it is going to ultimate lower levels. For next 1 or 2 weeks, it can remain at this lower level, but eventually volatility will pick up. That means one-way movement will not be there. There will be bulls and bears fighting. There will be some rally, some correction. So don't expect market to move in a one direction. Expect a lot of volatility over the next fortnight, and that means that the markets will give you a lot of trading opportunity as well. So there are a lot of opportunities in the market. Do not get concerned, but also do not be careless and don't get carried away. Do not create unsustainable trading positions. Always keep risk management under control, but at the same time, do not get too overly concerned as well. Make hay while sunshine. This has been our theme from April, May. A lot of opportunities are being presented, and I hope you are, as a customer, as a relationship manager, as a participant in this market, you are taking benefit of all the recommendations which we are giving. From 1st of May, 39 MTF or e-margin positions have been booked. We have been able to successfully capture a lot of positive alpha which market is offering. These are some names: 20%, 15% kind of returns post interest outgo we have been able to capture. As there are opportunities where we have captured 4%, 5% in some trading calls over a 1 week also. All in all, excellent opportunities has been captured by the team in MTF. In fact, these stocks, 7 stocks, we have booked profit in last 1 week itself. Kalyan Jewellers, TCI, GRST. Last week only, Subash gave a recommendation on this week on Kalyan Jewellers. Within 2 days, target was achieved. Nandish gave a recommendation on GRST. 12.8%, 16% kind of fantastic returns have been generated. Siddharth gave a recommendation on TD18. That was profit was booked in couple of days. So these are the opportunities which is available to you as a HDFC Securities customer, as a HDFC Securities relationship manager in BNPL categories. I want all of you to follow this research and make hay while sun shines. Not only on the trading side, on the fundamental side, from 1st of May, 52 recommendations, not 1, 10, 15. 52 recommendations have hit their targets. The list is there in front of you. 22%, 26%, 20% kind of return has been generated over the last 1 month, 1.5 months. Great amount of stock picking, excellent stock picking has been the mark of the fundamental team. And you can see quality names, large cap names have also been recommended, and where we have been able to book a lot of profits. Similarly, on the fundamental side, 10 recommendations have hit their targets. 31%, 19%, 15% kind of profits have been booked over the last the stocks which have been recommended earlier. The targets have been achieved in this week. On 12 to 15, we have been booking profits. So these stocks have hit the target. Money is available. Please deploy it into the new ideas which we will recommend every Monday. On the fundamental side, we do recommend couple of stocks, 2-3 stocks we keep recommending. I'm sure new recommendations will come to your way on the Monday, and throughout the week do keep following these recommendations. So I want to conclude, there is a lot of money to be made in the markets. Markets are kind. Make complete use of this opportunity. Once again, I'll tell you, make hay while sun shines. Okay, now we have some time, so we will open it up for the question and answer. So if you have any questions, you can put it on the chat window, and I will try to curate them and ask it to my analyst, and if I can answer them, we'll answer them. Stock specific answers, question answers, we will not be able to do. Only questions which are related to sector or Nifty, Bank Nifty, will be more than happy to answer. Okay, so by the time the question queue assembles, let me ask one question to both of you. So Nandish, Bank Nifty is showing some signs of consolidation. FIs are a little short there. So what is your outlook, depending upon data? What compared to Nifty, we should be a little cautious on Bank Nifty?
Yes, so there will be, as of now, data is showing weakness. As during the entire week, while FIs created fresh long in the Nifty, they were creating shorts in the Bank Nifty futures. Technically, also Bank Nifty is underperforming since last couple of weeks, but overall trend remains positive. So there is a one level 41,200 where we have seen call writing. So if we were to close above 41,200, then I think FIs were forced to cover shorts. So in that case, we might see a sharp short covering in the Bank Nifty, which can lead to a sharp upside movement to 45,000 levels. So as of now, one should remain slightly cautious, but above 41,200 level, which is not far away. We closed around 43,950. So if we were to close above 41,200, then I think Bank Nifty may lead to a sharp short covering.
Okay. Subash, any sector which is looking technically strong compared to Nifty, where traders, investors can focus during the next fortnight?
Yeah, I like the energy sector. It has broken out of a range. And also Bank Nifty and Fin Nifty are looking interesting. They have bounced back from close to the 50-day SMA. But as Nandish is saying, they are close to some near-term resistance. So once that resistance is cleared, then we can be more bullish on that Bank Nifty sector.
All right, so there are a lot of questions which has assembled. Let me try to read them and answer them. So stock specific answer, Darshit, we will not be able to answer. Vishwanath is asking Fed rate hike impact on Indian market. So in fact, Fed did not increase the interest rate this time. they have kept it steady, and that is leading to a fall in the our dollar index, and that is leading to the increase in the markets across the world. So pharma sector outlook, Tanmay is asking. Subash, pharma sector, we actually did come out with one report where it has bottomed out, and we have recommended pharma ETF also. Can you share some labels or information about pharma sector, please?
Yes, pharma sector is looking good on the monthly charts. It has in the month of March, it found support near the 50-month moving average, and it bounced back from there. That also coincides with the previous low, so it's made a sort of a double bottom pattern, and it has been rising for the last 3-4 months. So it is looking good on the long-term charts. Long-term targets could be around 14,400, which is also coinciding with the previous highs, previous intermediate highs, which were seen in January 2022. Short-term corrections can be expected, but overall, I'm expecting a further upside in the coming months.
Okay. Rahul is asking, results are excellent. Can we plan 1 or 2 sessions on risk management also? All right, Rahul. It is important to manage risk while trading and while investing. So we will try to give you sessions. We'll ask our colleagues in product and other risk management team to conduct some sessions. Raghu is asking, Raghu Sen is asking that give statistics of success of recommendation, and also we can want to also know about the failure. So yes, I totally agree. We should be totally transparent. The 52 stocks which we have shown in the fundamental side are success. If there are any stop losses or if there are any losses, look, we also do come out and inform our customers to exit from those stocks, whether the time period is over or whether any losses needs to be booked. Over the longer term, we do not claim to be right about 100%. Depending upon the market condition, depending upon our ability, we are correct between 60 to 90% most of the time. As this period, we haven't booked any losses in these recommendations. That's why I have not shown. But as and when, if there are any statistics which needs to be taken out and share it with our customers, with our relationship manager, we do share them the actual success ratio, actual percentage on out of after brokerage and taxes. So I'm all for transparency. If there are any losses booked, we will definitely come and tell you. So India VIX is not traded, so I don't think we should keep very high attention to Indian VIX. But there is a question on India VIX and what is the forecast. Nandish, Mr. Ganapati Raman is asking about India VIX. Do you have any outlook on or any opinion on India VIX, Nandish?
Yes, so as of now, India VIX is trading around 11. But as they was be told, in US the VIX is traded. Here in India, VIX is not traded. And if you were to see the long-term correlation between Nifty and India VIX, it is not so high. So actually, India VIX is not giving any signal as of now. But since last few months, it has been coming down. So it suggests that as of now, market can do well because. In India, we have generally seen whenever market is expected to fall sharply, then at that time only India VIX rises. Otherwise, India VIX remains more or less in the range or keep coming down. So as of now, India VIX is suggesting this trend to continue in the Nifty.
Okay. Surendra Keshri, then Prem Dishu and many others are asking about IT sector. So let me take 1 or 2 minutes to elaborate. IT companies have come out with a very weak set of numbers, especially the large caps. While the mid cap and small cap, they have announced good numbers, and that's why we have seen good traction in the product companies, in SaaS companies, in companies where there are earning visibility. Large cap IT companies will have to show 1 or 2 quarterly results which are above market expectation, and then the money will flow. Right now, they are into bottoming out process. They are actually not very bullish compared to the other part of the market. So it is better to concentrate on a mid-cap IT or a small-cap IT companies. If many of the viewers will remember that we recommended Zensar as one of our yearly pick at the beginning of 2023. From 220, 210 levels, it has almost doubled over the course of this year. So there are opportunities in the IT sector, and we will try to bring it out in form of technical recommendations and fundamental recommendations. But large cap IT companies are right now consolidating, and it is better to concentrate on other stocks for a shorter term. If you are a long-term investor and if you want to park capital safely over the next couple of quarters, IT can be a candidate. Stock like Wipro are unlikely to fall as long as the buyback is continuing. They have a lot of cash flow. They are using that cash flow to do buyback. So yes, it is correct that stocks like Wipro you can participate while the record date was open, and you can tender those shares into higher prices in the buyback. But other than that, we don't see much short-term trading opportunities as of now. As and when the sector turns around and as and when the momentum builds up, I'm sure our team will be adapt enough to, and they will come out with recommendations on that. All right, 40 minutes have passed. I think it is a good time to close. Any parting comments, Subash, Nandish, one by one?
Yeah, parting comment would be enjoy the bull ride till it lasts. So, but control risk by keeping strict stop losses and adopt a selective approach.
Wise words, Subash, Nandish.
Yes, so the good time is going on. Apart from index, mid-cap markets are also doing very well. So it's time to earn money. It's time make the hay while the sun shines, as you said earlier.
Correct. So indexes are at the closing high. They will be at the intraday high hopefully over the next fortnight. Mid-cap index and small-cap indexes are also doing quite well. International markets are doing well. We have given you clear stop losses, managed the risk with the help of those stop losses. But as the recommendations are there on the screen, there we have been sharing, please make full use of it and generate wealth for yourself and your clients. We will see you after one fortnight. This webinar will be available on YouTube. So take that link and share it to other customers also, other teammates who have not been able to join right now. And as we have been pointing out, good times are here. Make full use of it. Thank you, and we can end this webinar. Thank you, and have a great weekend ahead.
Bye.